Welcome to the Improved Credit and Finance Show. This is Wanda Strickbaden, owner and founder of Improved Credit Consulting Firm here in the Charlotte, North Carolina area. I am actually going to talk about the process of purchasing a vehicle. Last episode, I talked about why are car loan interest rates at 29%. And in that last episode, I discussed the process of when you go to a dealership and they pull credit, the kind of loans that they're giving out to consumers that have low credit scores. And a low credit score is anything below 640. The lowest credit score you can possibly have is a 350. So people that are going to dealerships to apply for car loans and are getting quotes of 29% interest rate usually have a credit score below 640. Some of them may have like a 500 credit score, or a 550 credit score, or even a 450 credit score. I want to help you guys because this past weekend I was actually out car shopping, and I wanted to do it myself so that you are fully aware of what this is like when you go to apply for a car loan. So whenever I talk to a customer and they ask me questions about credit, I always tell them, make sure that you pull a soft pull credit report first online to get an idea of what your scores may look like when a dealership pulls your credit, or when you go to your local bank to apply for a car loan, what that may look like before you go. You'd never want to be surprised when you go to meet with a financial services representative at your local bank or credit union, or when you go to meet with a salesperson at a car dealership when they pull credit. You never want to be surprised of what may show up on your credit report. So do it first. Look at it yourself online. It's a soft pull when you do it yourself. There are several websites. One of them that's free is www.annualcreditreport.com. I talked about that in my previous episode, why are car loan interest rates at 29%. So review that before you listen to this episode, because I'm going to talk more about the actual loan process and how that looks like. So guys, when you look at your credit report, if you notice any discrepancies or if you notice any collection debts or charge-off bills, you absolutely want to take care of those bills. You want to make sure it's resolved, either settled for or paid for, if they're not over 7 years old. If these debts are really old, meaning they're over 7 years old from the last time you made a payment on that bill, then you don't have to pay it off. You actually can dispute it for removal. And legally, you have that right. So don't pay debts that are old. Don't pay debts that don't belong to you. That's just common sense. Don't pay debts that don't belong to you. You definitely need help. We are a credit consulting firm that can help you fix your credit. So if you're looking for assistance from a professional, credit expert, visit our website, www.debt.com, or you can give us a call at 704-877-8739. All right, guys. So once you have access to your credit report with your credit score online, which is a soft pull, meaning it doesn't decrease your score when you pull it, you're going to basically want to see what your scores look like. You definitely want to make sure that your credit scores are over 640 with all three bureaus. With Experian, Equifax, and TransUnion, your scores need to be over 640 online. If they're over 640 online, the likelihood of your scores being pretty good at the bank are going to be a lot higher. So 640 to 679 is considered an average credit score. Okay, a 680 to a 699 is considered a good credit score, and a 700 to 850 is considered excellent credit. Okay, so every category matters because depending on what your scores are will depend on the interest rate that's quoted to you. So for example, I went recently to Charlotte Metro Credit Union, which is here in the Carolinas, and applied for a car loan there. Now that was my first application for a car loan. I haven't had an application for a car loan in I don't know how many years, maybe 2 decades. Most of the time I'm usually buying with cash, like a used car that I can afford. I don't normally get a car loan. That's just me. I don't really care for a depreciating asset. But that's just me. But I decided this time I'm just going to test it out to see what kind of interest rates they would give me, what the maximum loan amount they would give me. I'm just curious. So I went to the credit union and applied. And at first, she quoted me an interest rate of 2.99%. And I thought that was a pretty good interest rate. Now, the terms were, I can choose my own term, which is actually a very good thing. You know, I can choose if I wanted to pay it off in 2 years, 3 years, 4, 5, 6, 7 years. You get the point. So, and when it comes to the loan amount, I could qualify for up to $39,000 for a car loan. That's also another good thing. So not only was the interest rate pretty competitive, but so were the terms. And that's what I needed. I had no down payment needed, nothing. It's just a straight off loan. Now, here's the thing. Anytime you apply for a car loan, do not go to a dealership, because what a dealership will do is they'll take your application and they'll go ahead and they'll pull your credit. What they don't tell you is that they have anywhere from 10, even up to 20 different lenders that they work with. And every single bank is going to pull your credit. You may end up leaving there having anywhere from 10 to 20 hard pulls in one sitting. Most customers are not aware of this, and the sales reps are not going to tell you that, because they at times don't even know that whole process, because there's a financial, manager that takes care of all that. So they may say, yeah, there's a hard pull, but they're not going to tell you how many banks are pulling it, because the salesperson, some of them may only know so much information about that, okay? And every single hard pull decreases your credit score. So imagine this. Imagine you have 20 hard pulls, and each one decreased your credit score 5 points. Add that up. 5 times 20 is a 100-point decrease. Can you imagine going in there with a 700 credit score, knowing that because you went online and checked it out and you noticed your scores are like in the 700 range, and then walking out of that dealership knowing that your credit scores decreased 100 points and they're now 600? I would not be happy with the process if I found out that my scores dropped that low. And believe me, it happens every time. Every time you go to apply for a car loan, that's what happens. Your scores drop. So I always say, do not go to a dealership. The second reason why you shouldn't go to a dealership to apply for a car loan is because they quote you interest rates based on your credit score. So the lower your scores are, the better it is for them, because that's how they make their money on the back end. So, for example, one of the clients that called me several days ago and told me about his application for a car loan. And he said that he was quoted a 29% interest rate. And I asked him, I said, what was your credit score? He says, I don't know. So I told him, I said, if you're going to get quoted a 29% interest rate, I'm guessing your scores are in the 400s, because you have to have a pretty low credit score to have that kind of interest rate. I said, on top of that, a 29% interest rate on a car loan. Can you imagine having a car loan at 29%? I mean, if you just, I tell my clients, Google what that would cost you when it comes to interest. This is ridiculous. Let's say you purchase a car for $25,000 and you have a 29% interest rate with a 5-month term. That's $794 in payments. $794 in payments for a $25,000 loan amount at 29% interest. Now imagine having the kind of credit that I have, and you get quoted 2.99% compared to 29% for the same loan. That payment is only $449, okay? Huge difference, all right? That's saving you $291 a month. A month. Now imagine in 5 years, okay? A 5-year term. Do you know how much interest you're paying? $17,460 in interest because you have bad credit. $17,460 in interest because your scores are low, compared to what you could have been saving if your credit scores were higher and you had no unpaid debt. So that makes a huge difference. 29% compared to 2.99%, okay? I'm here to educate the community, because I feel like at this point, everyone needs to know about credit. Everyone should have a better understanding. And Googling your questions and asking questions online, you're not going to get that. Okay, every consumer has a very unique credit report, and not one credit report is the same as the other. Okay, not so every situation is different for everybody. Okay, so with that being said, if there's anything you learned today is never go to a dealership to apply for a car loan. Always check your credit before you allow a financial service rep to pull your credit. And definitely talk to a credit expert if you have credit issues like Improved Credit Consulting Firm. We can help you because we are a legitimate credit repair company and we've been in business for over 16 years and can absolutely assist you in fixing your credit before you go to apply for a car loan. So as of today, I wanted to share with you that experience. I also want to talk to you guys about leasing. Most customers that have credit issues or don't want to be committed to a car will choose leasing options. Now, leasing is not the best because there's so many stipulations, some leasing options will tell you that you only have anywhere from 10 to 12,000 miles that you can drive in that vehicle within that same year, or they'll charge an extra fee of $25 per mile if you go over that. Can you imagine the exact bill that would come out to be if you went over that mileage? And then there's other stipulations, like if it's a 39-month lease term, they say you have the option to purchase, but all these other extra fees that you're not aware of are attached to that leasing option once it ends if you want to buy. So you end up spending way more money for that car than it originally was even worth. And all these other stipulations that you have to follow. So it's almost like having a car loan but with chains on it, because now you're chained to that loan. And it's ridiculous. I never recommend leasing options unless you just don't have any other choice and you're, single parent with children and you don't have the money to repair a car and you would rather play it safe and have an actual lease option that has full coverage, including wear and tear, so that you don't have to worry about ever having to, repair that vehicle. And, after a 39-month term ends, you can actually upgrade to another vehicle. So if that doesn't bother you and you have credit issues but don't have the money to fix credit, then leasing option is available. I don't recommend it, but it is available. So I went this past weekend, so I decided I'm going to go to my credit union, apply for a car loan to see what kind of interest rate will be quoted to me, which is 2.99% for a used car and 1.99% for a new car, which two interest rates was quoted to me, which is perfect. 1.99% for a new car. That's pretty good. And then I went to Buick, and I decided I'm going to go test drive a Buick Cascada, which is one of their convertibles. It just came out last year, 2016. And the gentleman that was sitting there gave me a quote for lease option. And he says to me, if you want to purchase this $38,000 car loan, or if you want to lease it, we have options here too. I said, well, I don't want you pulling my credit because I know how it works for a loan because I already have one. I said, but let me go ahead and see what it would look like if I leased it. So he went ahead and pulled my credit with one bureau, and I made sure to ask, how many bureaus are going to be pulled? Because there's Experian, Equifax, and TransUnion. Are you going to pull all three? And that's okay if they do. But I also asked how many pulls within that time frame, or how many banks are pulling my credit. He said one. And he said, okay, no problem. So he went ahead and pulled Equifax, and he said to me that my credit score was 697. Now, earlier today I talked about that I went to a credit union and pulled credit. So my credit score was in that same range, okay? Now, you have up to 30 days to allow another bank to pull credit, and your scores will remain the same when it comes to car loans. But do not allow a dealership to pull 10 or 20 different pulls within that 30-day time frame. You don't want that because your scores will drop. So to make a long story short, he quoted me a payment of $624 a month for a 39-month term. Okay, and I thought that is really expensive. That's without a down payment. I went ahead and I test drove the vehicle for 2 days, came back and said to him, I'm not going to go that route of purchasing this car. Then he says, oh, you know what? We were able to get the lease terms to $575 a month instead of $624. And here's the thing about car salesmen. When I sat there and I asked him, are you sure you can't give me a better deal? He said, nope, that's the best deal we can give you. I walked away and I was upset. Even though I was able to test drive the car, I knew the guy was not telling me the truth. And then I come back and tell him, no, I'm not interested in the car. And right when I'm about to walk away, they give me the best possible terms they can give me. So, as you all know, car salesmen are car salesmen. They're trying to make the most money for their buck. So at this point, don't ever trust the first word that they give you. Always come in there prepared to know what you want to pay, and always be prepared to tell them no at first and walk away to see what kind of deal they'll give you if you come back. All right? I hope you guys have a joyful time looking for a car, but remember, if you need a credit expert, we are here. Improved Credit Consulting Firm. Give us a call at 704-877-8739 or visit our website, www.letterI, debt.com.